Hey everyone, welcome back to Stog. This week, we're cutting through the noise around precious metals. With markets selling off and Russia making headlines for selling gold, a lot of people are asking, is the great rotation into gold and silver over? The short answer, it's just getting started. But let me show you why with actual data, not hype. First, let's address the Russia situation that spooks some precious metals investors. Yes, Russia's central bank did sell some gold in November, but here's what's really going on. This isn't new. Russia has been doing this regularly since early 2023. And even back into 2022. It's a domestic liquidity management system, not a bearish signal for gold. Here's the process, in simple terms. Russia's National Wealth Fund sells gold to their central bank. The central bank then creates rubles and gives them to the government, which uses these rubles for expenses, including war funding. After that, the central bank sells some gold into the domestic market, and Russian citizens buy this gold with their rubles. Finally, the central bank uses those rubles to buy the same amount of gold back from Russian miners. It's essentially a closed liquidity loop, confined to Russia's domestic market. Their gold reserves stay stable, while the government gets the operating funds it needs. And here's the ironic part. This whole process proves that countries can operate without US dollars if they have strong gold reserves. Russia now holds over 40% of its reserves in gold. This strengthens the case for what China is building an alternative system for countries concerned about dollar-based sanctions, especially after the Russian asset confiscations in 2022. So, this isn't bearish for gold at all. It is actually bullish because it gives central banks another reason to accumulate gold and reduce their holdings of US dollars. Now, let's talk about the real rotation. This week gave us a perfect case study. Nvidia beat earnings expectations and raised their outlook. The stock jumped 5% in pre-market trading. Then what happened? Nvidia dropped nearly 6% for the week, and it's now sitting 14% below its highs. It dragged the S&P 500 and the Nasdaq down with it. Meanwhile, Bitcoin is down 30% from its 2025 highs. Ethereum is down 40%. Palantir is down 25%. But what about gold? It's down only 7% from its 2025 highs. And silver is holding strong relative to everything else. Remember the hype from about 2 weeks ago? Bitcoin influencers were flooding YouTube and Twitter, claiming that gold holders were about to rotate into crypto and tech stocks. They said people who drove gold from $1,600 in 2022 to over $4,000 today were about to dump it for Bitcoin. Well, it's not happening. The actual great rotation is happening out of bonds, the world's largest financial asset market, and into precious metals. And why is this happening? Because trust in fiat currency is eroding. Let's look at the real performance data, because the numbers don't lie. If you bought the same dollar amount of these assets every single month since January 2020, and will factor in a 10% premium on metals and dividend reinvestment for stocks, here's how you would have done. Silver would be up 81%, gold would be up 79%, and the S&P 500, with dividends, would be up 59%. Despite the incredible stock market run we've seen over the last 6 years, precious metals have significantly outperformed on a consistent buying schedule. And here's the key point. The stock market hasn't even crashed yet. We know that crashes trigger stimulus, bailouts, and currency debasement, which historically create the biggest gains for gold and silver. This rotation is still in its early days. If you want to see the future, just look at what's happening in Japan this week. As the yen weakens, prices for goods are soaring, making life unaffordable for many Japanese citizens. And what's the government's solution? To fight inflation with more inflation and more currency debasement, you should expect this pattern to repeat globally as economic problems continue to mount. Here's the critical connection. Japan is the largest owner of U.S. debt. If Japan starts dumping more U.S. Treasury bonds to support the yen and fund its own stimulus, which I expect them to do, the recent bounce we've seen in the dollar is only temporary. The dollar strength we've seen recently hasn't impacted gold and silver prices much, and that tells you something important about where smart money is positioning itself for the future. So, looking ahead, do you want to expect the dollar's strength to last beyond April 2026? That is, when I anticipate real interest rates will turn negative, driving even more capital into precious metals. If we get a stock market correction on top of that, gold and silver could significantly outperform, similar to what we saw from 2000 to 2012 when metals gained about 500% while the S&P 500 stayed relatively flat. Based on the bond to precious metals rotation that's already underway, my price target for gold is $5,000 by 2026. For silver, I see it in the $60 to $80 range by 2026, and that's a conservative estimate. But let's have a short-term reality check. If the stock market really crashes, you should expect short-term volatility in precious metals too. We've already seen a taste of this, but volatility creates opportunity. Any pullbacks are buying opportunities for those with a long-term perspective. The key is to focus on the signal, not the noise. Daily price movements, hype narratives, and fear-mongering are all just noise. The signal is clear. The bond market is rotating into precious metals. Central banks are accumulating gold. Trust in fiat currency is eroding, and historical patterns are repeating. The great rotation into gold and silver isn't ending, it's accelerating. Stay focused on your accumulation strategy. Tune out the noise and watch the signal. What are your thoughts on the precious metals market right now? Are you buying, holding, or waiting? Drop your perspective in the comments. If this analysis helped you understand what's really happening, hit that like button and subscribe to StateLog for more data-driven market insights. See you in the next one.